The following program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit AbsoluteLoans.com or call 888-90-HOMES for cost information. You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome to the Money Hour at 11:50 a.m. KKNW, the Saturday, January 24th show. I am your host and mortgage expert, Tina Mitchell. It's a great day to talk money, and that's why I'm here with you and what the show's all about, how to make money, save money, and build a better quality of life for you and your family. If you're hearing my show at a different time or day, you're listening to a rebroadcast, but I'm here to answer any questions or connect you with the guests that I have in studio today. Please call into the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And the lineup for my guest in studio today, Scott Schaaf with SW Group Credit Repair. Your FICO score determines the terms of interest rates you pay on credit cards, car loans, mortgage loans, and even the cost for car insurance. A lot of employers also check your credit to determine if they're going to hire you for that position. So credit's important and it affects everything. Good or challenged credit, how to get that into an excellent credit history, credit score is what we're going to talk about with Scott today. Also in studio, Stephanie McCarthy, president and co-owner of Living Northwest Realtors. If you're currently a real estate agent or looking to get into the real estate business, Stephanie's here to discuss how to find the right company for you and where to hang your license. And last in studio is Ian Tolmie, and with Caring Transition Seattle, gives family peace of mind by managing all of the details of a senior relocation. They are a professional solution for estate move, downsizing, and estate sales, including a full and partial liquidation. Great information and great guests in studio. Again, for more information on any of the topics discussed or to talk directly with my guests, you can call into the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. Let's go ahead and start out the show, as always, with a little money chat. Money. More great news for 2015, and actually this is for 2014 wrap-up, but mortgage insurance tax deduction is a deductible and back for loans closed in 2014. As a homeowner, you are well aware of the many home-related tax breaks, but in 2014, if you closed on a home or a refinance, it just got better. Originated in 2007 and extended on December 19th, 2014, legislation is passed once again, allowing for the tax deduction of mortgage insurance premiums for qualified borrowers. This tax deduction was created as part of the Tax Relief and Health Care Act of 2006, and again, originally applied to mortgage insurance policies insured in 2007. Unless Congress renews this deduction, it will not apply for loans originated in 2015. The deduction is effective on purchases and refinance transactions, again, closed December 31st, 2014, or before. Now, the private mortgage insurance deduction can be taken for policies issued by private insurances as well as insurance provided by Federal Housing Administration, the Department of Veterans Affairs, and the Department of Agriculture Rural Housing Service. So basically, your conventional FHA, VA, and USDA financing is a potential qualification depending on you and whether you qualify as an individual, which we'll talk about. It's counted as an interest. So many homeowners itemize their deductions because their mortgage interest and property tax payments exceed the standard deduction amount they could claim. It's in the interest you paid section on your Schedule A that you'll find on the private mortgage insurance deduction. It's claimed on line 13, and the mortgage insurance deduction applies to refinances on the original loan amount, but not any extra cash that you might have taken out in the loan on that refinance. It may also qualify in a second mortgage if it was a purchase money second. If you did do a second mortgage and the second mortgage was utilized for improvements on the home, and that's not counted. And we're talking about the interest deduction, because if you have a second mortgage, you're actually not going to have PMI for that. If you purchased a second home, it would qualify as well. You can purchase a second home with less than 20% down, which would mean you'd have more private mortgage insurance to pay on that. Now, there are income phase outs. There are no statutory limit on the amount of PMI premiums that you can deduct, but the amount might be reduced based on your income. So the deduction begins being phased out when your homeowner adjusted gross income, or AGI, is more than $100,000. This income limit applies to single, head of household, or married filing jointly taxpayers. So the phase out begins at $50,000 AGI for married persons filing separate returns. So the PMI deduction is reduced by 10% for every 1,000. A file's income is over the AGI limit. So the deduction disappears completely for most homeowners whose AGI is $109,000 or $4,500 for married filing separate taxpayers. The Schedule A instructions include a workout sheet, and as most of the tax preparation softwares will as well. But you always want to double check with a licensed CPA. And as always, if you need a introduction to one, this is the Money Hour, and I bring into studio the best of the best in every arena regarding your finances. So call into the show and I can get you connected and introduced to a certified licensed CPA. Now, for any of my listeners, my renters out there, a shout out to all of my renters. My advice is to run numbers. If you're renting, to compare with homeownership. There is a difference between rent and mortgage payment, which we have talked about before. Mortgage interest deduction is the first. So when you pay a mortgage, the interest that you pay on a loan is deductible up to a maximum threshold or maximum income limit. So for most people qualifying for 100% of the deduction on their mortgage interest, if you had a 4% interest rate on a $400,000 mortgage, your deduction would total over $16,000 for the year. If you were in a 28% tax bracket, this deduction would save you over $4,400 a year. There are no deductions if you're paying rent. Now, property taxes are deductible as well. Property taxes fully deductible for homeowners, any range from 1 to 1.5% of the value of a home based on our local market here. So if you're paying a rent of $1,500, just an easy way to calculate an estimated deduction or tax benefit would just take that and add your tax bracket. So if you're in a 28% tax bracket, we're going to add that to $1,500, and that is equal to a mortgage payment of $1,950 a month. Again, these are just hypothetical examples, but talking with a licensed CPA, you can find it exactly where you're going to fall. To wrap it up to my renters and encouraging right now in this opportunity for real estate where interest rates are at, the tax benefit that you have, when you sell your home, you also have another benefit up to $250,000 if you are a single or $500,000 if you're married, and profits is exempt from taxation. What other asset class do we get to see this type of benefit? Any amount over those thresholds is taxed at capital gain rates. Historical capital gain rates have been substantially less than tax rates on the original income. When you leave an apartment, no tax will be due, but you're not going to have any profit anyways. So last is 30-year fixed rate mortgage. That is a 30-year fixed rate. You can get a fixed rate mortgage. What does that mean? It means it's fixed for the life of the loan. So you know exactly where your mortgage payment's going to be outside of taxes and insurance adjusting on an annual basis possibly. But rent, you have no idea where your rent payment's going to be. Take a look at how much your rent has gone up in the last couple years or since 2008 when the crisis happened. It's been unbelievable what's happening. And then last is on a mortgage, you do have eventually at some point in time, you're going to be mortgage free. If you have a 30-year fix, that loan's going to be paid off in 30 years. Rent, there's no payment site in end. Or no end in your payment site. However you want to look at that, it's the same. So really good opportunity, again, for renters to take a look at the numbers, run the numbers and see how it is for you to take advantage of home ownership. Coming up next in the Money Hour, making small changes on your credit report and how you use your available credit lines can make a big difference in your credit score and everything regarding your finances. Scott Schaaf with SW Group Credit Repair right here on 1150 AM KKNW after this short break.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
Is bad credit holding you back from getting a loan? The credit experts at SW Group can help you get back on the right track. Their team of experts has helped hundreds of people across the country fix their credit and get approved for the home of their dreams. Take charge of your financial future today. Call Scott Schaaf at 954-531-2153. Again, that's Scott Schaaf at 954-531-2153.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, January 24th show. I'm here to help you build a strong financial blueprint 1 week and one show at a time. If you're hearing my show at a different time or day, you're listening to a rebroadcast, but you can call into the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. In studio right now, well, actually on the phone right now, Scott Schaaf with SW Group Credit Repair. Scott, thanks for coming back and sharing your wealth of information about credit.
Great to be back on, Tina.
A little bit about Scott. Scott is a nationally recognized credit expert and president of SW Group, a private referral-based credit repair organization that works with lending banks across the country to assist consumers that have credit challenges, getting them back in a position to where they can qualify for a mortgage or other things that they're looking at getting a loan on. And as we talked at the beginning of the show, your credit, your FICO score has to even, it can make a difference on whether you're getting a job, getting hired at that position that you want. So it can affect every aspect of your financial life. So, Scott, let's go ahead and start out and give a background about SW Group.
Sure. SW Group is a credit repair organization, and we are not generally commercially available to the general public. We primarily work with mortgage companies that we have personal relationships with, and basically people that go in that want to purchase a home and they have some challenges with their credit. They're referred over to us, and we're able to, in a lot of cases, get them back to the bank fairly quickly to get approval.
So what about credit repair in itself, and just a little bit of explanation for my listeners on what exactly is credit repair?
Sure. A lot of people hear it, but they just don't really know what it is. Basically, it's a process of our company, or it's the consumer themselves, if they choose to, filing disputes with the 3 credit bureaus, and by law, they have 30 days to come back and reply. And in an example scenario, somebody would come to us, they have some negative items on their reports, such as collections or late payments, and we would have results for them in 30 days from all 3 of the major credit bureaus. And we can also do some advanced tactics where we can also go directly to the creditors themselves and use the Fair Debt Collection Practice Act to go after those items, which in the future it has proved to be very effective.
And so, Scott, if someone were going to ask, why hire a credit repair company instead of doing it themselves, what would be your answer?
Well, if you have a high-profile court case, just because you can represent yourself doesn't mean that you should. It's best to have somebody who's experienced, who knows all the its and outs, especially when dealing with the credit bureaus. You know, if you try to do it on your own, in a lot of cases, they'll just kick it back as frivolous and they won't even investigate it because it's like a cat and mouse game with the bureaus. They try to not investigate the items. So you really have to know the laws. You have to know the specifics. But it absolutely is a consumer's right to do it on your own. But if you don't know what you're doing, it's probably a better idea to have somebody who's experienced to take care of it for you. Totally agree.
And, Scott, what about the percentage of consumers that have errors on their credit report?
Yes. Even if you go to the FTC website, they will have lots of information on there about how usually about 1 in 4 people have errors on their report. And 4 out of 5 people that file disputes with the bureaus are able to see changes on their report. But the numbers are in the millions, and that's why companies like ours exist, because there are tons of errors that are out there, and they can affect everything when it comes to your financial life and ultimately hit your wallet with money that you're spending just because there's an error on your report, extra interest that you're paying each month. So it's very important to know what's on your report.
And not just errors, Scott, but as well as violations, correct?
Sure, absolutely. And it occurs all the time, and that's why our company will analyze the report in its entirety and find those violations. There's incidences where companies double report an item. They go past the statute of limitations, as well as collection companies not having the proper documentation that they're supposed to have to put these items on your report.
So put the burden of proof back on the creditor.
Absolutely.
So what about some couple things that a listener can do to improve their credit on their own?
One of the most actionable things that you can do right now is to pay down your balances. People think that, I pay my bills on time each month, but if you have a total of $10,000 of available or for your credit limits, and you're using half of it, even if you pay it, the majority of it each month, that's bad. It's what's called a utilization ratio. So you want to get down your balances and also go after any negative items that are on there, and make sure you pay on time as well.
And that's a really good point on the utilization because, a lot of people use their credit card for the free money for 30 days and then they pay it off. But you don't know when that credit report's going to be pulled. And even when you know when it's going to be pulled, you don't know when it's going to actually reflect that zero balance. So if you're using your card, you just want to make sure if you're doing it that way that you're not getting over that 50%. And actually 30% is even better, correct? Keeping it at 30% utilization.
The lower the better. I mean, I always say, if you can keep it below 15 to 30%, it's great. But the less the better.
And it's important to know we're not talking per card. We're talking your overall revolving debt. So just as
Correct.
you said, if you have $10,000, because I think if people do know this, a lot of times they get confused and think it's per credit card, where you can just move something from one card to another to get to that perfect ratio for each individual card. But it's the overall total revolving credit debt, correct?
Yep. Add up all your credit cards and your limits and add up all your balances on all of them, and that'll give you whatever percentage that is, that's your utilization rate.
Yes. So what are a couple things, so let's talk about the Fair Debt Collection Practice Act, Scott. What is it and how does it protect the consumer?
Well, we use that act to go directly to the actual creditors themselves. So, for example, if you have a collection account that was originally with AT&T, for example, we're going to go to the bureaus to dispute it, but we can also go directly to the collection company that bought that account from AT&T and basically use that act, the Fair DCPA Act, to make them come up with all of the paperwork to prove that they have the right to put that on the report. In a lot of cases, they don't because the debt is sold in bulk. And also, not only that, we're able to actually file suit against abusive collection practices. So if somebody is receiving, and I don't want to get into all the specifics, but there's so many horrific things that these collection companies are doing to try to collect money, and they're in direct violation. There's a very specific set of guidelines that they have to follow. And if we catch them in violation of it, we'll usually settle out of court for about $300 to $500 per phone call.
Wow.
So they can't call you throughout the day. They can't leave you voicemails. They can't call and threaten to have a sheriff around the corner that's going to come arrest you. I mean, some of the things we've come across. But that's just an additional service that we do provide, and the legal fees are built into the federal statute, so it'll be at no additional cost to the client for us to send a demand letter over.
So, Scott, going back to if they can't provide the documentation and the proof, again, putting the burden back on them, what happens to that collection?
Well, in a lot of cases, we're able to get it removed from the report.
So completely deleted.
Once they see you're not a pushover and you know the laws and you're documenting all the correspondences going back and forth.
Got it.
We can help to have that item removed.
So, Scott, there are different types of credit reports. Can you talk about this?
Sure. And that's kind of twofold. There are some reports that are different. For example, when you go to buy insurance, they run a different type of credit report that's specifically designed for insurance and their variables. Same thing with utilities. They'll run a utility credit report. So you have your different credit reports there, but also when you go to these consumer websites where you put in a credit card number to view your reports,
yes,
a lot of people think Credit Karma is amazing. They're really not. There's no account numbers, and they're only TransUnion. But the consumer reports vary from the mortgage reports, which is what an actual bank will pull. It's a B2B report, business-to-business report. So the scores can vary a lot on those as well. And a lot of people think, well, I just pulled it up online. This must be my score. And in some cases, it's not when you actually pull it at a bank.
Yeah, which I don't know that ever has a client given me a credit score from an online credit report that they've pulled that it's been accurate. Now, it varies. Sometimes we're talking 5 points. Sometimes we're talking 30 points. But it's hard to explain that. It's like, well, that doesn't make sense because I'm getting my credit score. This should be my credit score. But the algorithms are different, and it's just very, very confusing.
Mm-hmm.
So there are a lot of credit myths out there, Scott. Can you share a couple with my listeners?
Sure. There's actually a few. One is employers can see your credit scores.
Mm-hmm.
They cannot see your credit scores. They can see your credit report, however. So they can see all the items. They just can't see whether you're at a 650 or a 700. They can't see the number itself. That's one.
Okay.
Also, one big myth that's out there is if you close open accounts, that's a good thing. Okay.
Mm-hmm.
What that does is, let's say you have a credit card with a $10,000 limit and a zero balance. That's helping you because your utilization ratio is going to be down. If you close that account, that number of whatever available credit is drops off of your utilization rate. So,
and on that too, that's one thing that you can't do to refix. I mean, once you've closed out an account, and they, typically it's any older than 2 years, those can have some really positive in that credit history that you have. And once you close those accounts back down, you can't go back and fix that. So it's a pretty devastating mistake to some people's credit scores.
Yeah, and they think that, hey, I'm doing the right thing here. I'm closing an account. I don't need it. Well, that's great. If you don't need it, wonderful. Keep that balance at zero, and that's going to keep your score up there.
Exactly.
Because you have the available credit and you don't need it.
What other myths are out there, Scott?
Well, there's a ton that are out there. Those are really two of the most popular ones that are there. But it's what I would recommend to everybody. One of the myths we kind of spoke about earlier on, which was your balance is being high, and thinking that, well, I'm paying on time. That's a good thing. That people think that. I can't tell you how many people come and I see their balances and I tell them, listen, you got to get those down. And they say, really? Wow, I thought that the fact that I was putting money on my card and I was paying each month was good.
Yeah. And so just remember, you use your cards, pay it off every month, but the utilization ratio, you ideally want to make sure under no circumstances it gets over 50%. And, if you can keep it down to that 30 or less, it's going to be more positive. So what about inquiries, Scott? We had a conversation last week or a week and a half ago in regards to inquiries. And then again, this is another one of those things. It's hard to explain to a consumer because there's no firm point systems or rules on if it is or it's not. We all know that inquiries, if you're having your credit report pulled, and this is a hard inquiry to where you're actually applying for some type of loan. Soft inquiry, different, doesn't affect and doesn't count as an inquiry. But can you talk a little bit on that?
Sure. Yeah, you want to, if you're shopping around for something and they see that you're, usually, if they see that you're looking to buy a car and they see that your credit is run for something that's similar to that in a short period of time, generally that's not going to really affect you as bad because they see that you're just, looking at several different places. But if you are just going around just blatantly running your credit for all sorts of different things, they're going to kind of look at that like, well, this doesn't seem very responsible, as on their end. Why is this person going 1 minute looking to buy a home, the next minute buying a car, the next minute trying to get a credit card, the next minute trying to get this and that? They kind of, so it really varies. But if you're doing it responsibly and it's being done for something specific and they can see that, it's generally not going to harm you too bad. It still does hurt your score. It's always good to do a soft inquiry if possible, but generally you want to, and inquiries certainly do not have as much of an impact as collection items or public records. They're the least damaging than anything else that can affect your credit score.
Yes, yeah. Well, Scott, thank you so much again for joining the show. I appreciate the insight and information that you provide for my listeners.
Yep, and look forward to being back on in February.
Likewise. And coming up next in the Money Hour, it's a great real estate market, and for the new year brings new possibilities. Are you a real estate professional, or have you thought about starting a new real estate career? How to find the best company that will fit your own personal needs. Stephanie McCarthy, president and co-owner of Living Northwest Realtors, right here on 1150 AM KKNW after the short break.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, January 24th show. I bring into studio each week the best of the best experts in everything that in regards to your money. I'm here to help you in today's economy. If you're hearing my show at a different time or day, you're listening to a rebroadcast, to talk with myself or the guests that I have in studio, you can call into the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. In studio right now, Stephanie McCarthy, president and co-owner of Living Northwest Realtors. As a real estate professional, picking a real estate brokerage company to associate with is a very important and can be a very difficult decision. What's important to know to ensure you make the right move for yourself? Well, I'm going to have a conversation just about that with Stephanie. Stephanie, thank you so much for coming into studio.
Why, thank you, Tina. It's an honor to be here.
And a little background about Stephanie. For over 20 years, Stephanie has been involved in the real estate industry in many capacities. It started in escrow, then sales rep for a national title company, to selling and assisting with mergers and acquisitions for Coldwell Banker, ERA, and GMAC real estate franchises. Later, she joined her husband in starting their own real estate company. 2001, they started McCarthy Real Estate and later joined the national brand Living Northwest Realtors. Giving back to her community is so essential in what she does. And as another important part of Stephanie's life, her involvement in the community includes Rotary, the chapter, and the North Shore Scholarship Foundation. All in all, real estate is her passion and contributes to a big flow in her life. Stephanie has been voted 5-star Realtor through Seattle Magazine, Global Relocation Specialist, past president of the King County Women's Council of Realtors, 2013, and incoming president for Washington State Women's Council of Realtors in 2015. So, Stephanie, I'm really excited to talk about this topic, a little bit different than some of the conversations that I have with some of our experts in our local real estate market, is more on gearing towards the consumer. But today I really wanted to talk to you about gearing towards other real estate professionals that are listening to the show, as well as people that are looking for a career change. And we hear a lot right now in the industry because it's such a good opportunity to be a homeowner. There's a lot of great things that are happening in our real estate market that people are thinking, you know what? Maybe real estate might be a good move for me in career. So what are the difference between being a real estate office versus being a realtor office?
Well, that's a great question because the term realtor and real estate agent are used quite interchangeably, but that is really actually incorrect. There are differences between a realtor and real estate agents. They're not the same. Although all licensed, both the realtor and the real estate agents are licensed to sell real estate, the basic difference between the real estate agent and realtor is that to be a realtor, you are a member of the National Association of Realtors. Mm-hmm. And as such, the main difference that you hear a lot about, but are likely confused about, is that a realtor must subscribe to the Realtor Code of Ethics. So what does that mean to the consumer? The Code of Ethics is strictly enforced, and it contains 17 articles of various underlying standards and practices. Not to mention the power of what the National Association of Realtors does in helping keep costs down and helping sellers get the best deal when selling their home and helping buyers get the best deal when buying homes.
And Stephanie, I heard a stat not too long ago that, almost half of the agents out there are not realtors. They're not part of the National Association of Realtors. I mean, that's a lot. I had no idea that it was so many. So, Stephanie, let's talk about the difference between an independent broker versus partnering with a franchise.
Well, and just to kind of touch on that statistic that you just pulled out, I think a lot of it comes from, there's a fee and there are courses, additional courses. There's money involved when getting into this level of becoming a realtor. And so there is a big difference because there are those who are spending money and time to improve their professionalism. Yes. And then there are others that are there. I'm not saying they're not great agents, but they are more concerned about cutting back on the amount of money that they're spending each year to become a realtor.
Yeah, makes it a great point, Stephanie.
So back to your question about the difference of when an agent is looking at the difference between an independent broker and partnering with a franchise. Yes. Just from experience, I mean, obviously I've sold franchises for many years, but when we first started out, my husband and I own our real estate company. We started as an independent broker. And what was very interesting about that and quite an eye-opener and actually gave me better tools when talking about the difference of independence to partnering with a broker is that when we started out, we were creating our branding, our own tools and systems and ongoing education. However, when we started bringing more agents aboard, trying to keep up with the masses of all of the changes that were happening in real estate, we realized that, there are teams, there are divisions through the franchise organizations that spend a lot of time pulling statistics and figuring out what's most important to the agent, to the seller, to the buyer. And that's all they do is they spend time creating marketing pieces, tools, systems, classes. And as we continue to grow, we realized it was very important to us to not continuously updating all of that information on our own, but to really coach our agents to be the best that they could be in creating their own uniqueness, but with the power of the franchise behind us.
Yeah, so you can focus your time on that area versus focusing your time on all the other stuff that can be taken care of. It makes total sense. So what about the culture, Stephanie? Because you and Keoki, as owners of Living Northwest Realtors, the culture that you have is very unique and special. Why is that so important when you're choosing a company to work underneath?
Well, it is probably the most powerful thing within an organization. And after going through 14 years of our real estate company, we started out as wanting to just get as many people in as we could. But when you start to pull in the perfect group of people, our vision is to attract individuals who all bring a uniqueness, like a tribe. We all have our same vision of real estate, yet everybody that comes aboard with us has a unique offering that we can all learn from that help us to grow and work in life. And when you disturb that culture by just trying to add tons of people, it really can affect the way that even the agents do their business. So that is by far the most powerful thing that we really look at when attracting new agents to our organization.
And Stephanie's, knowing what you know now, what are the three important things that you'd be looking for before making a decision?
Well, obviously culture. Culture is very big. But it is challenging, or it's interesting when you think about those who are just getting into the industry, because there are all different sizes of real estate companies, and it really does depend on the individual and what they're looking for. Are they going to go into an organization that's a large organization that has training and just a lot of people? Sometimes you can just be a number in there, but then sometimes too there's there's the power of a large group like this. But for me, it's really important to figure out the culture, finding a place that helps create successful, thriving, and happy people. And I know that seems very vague, maybe, but, if your group is happy, they really do grow, and they teach each other through all of their experiences. And that is a wonderful, wonderful piece. And then an organization that would coach you in pinpointing your uniqueness, yet backing it with the tools and systems that you have available. And I think those are three things that really, if I were to start all over again, those would be the things that I would be most interested in.
And I've heard you say the word uniqueness many times, Stephanie, and I think that's what is so special about your company is everybody is unique and really tailoring what they need to their uniqueness and to be able to shine and show their uniqueness within under the umbrella of your company is just awesome. So what about a seasoned agent? So seasoned agents that are thinking about making a change, what do you think is important to them when thinking about making a company move?
Well, I think probably the biggest thing that stands out is when you start with an organization, you do all of your branding. You've been your personal branding, your company branding, and making a move can be challenging. But if you find the right organization with a group that really has that process in place of transitioning over by helping the agent revamp their website. I mean, it is a huge process, but, the companies that are into attracting successful seasoned agents have a process in place to make it very smooth for the agent. And, it's kind of interesting, too, is as they continue to grow their business, you find that it's not so much about what the commission structure is. It's a very unique business because typically when you go interview for a job, the owner or the person interviewing is looking at what this individual can offer. But a lot of times in real estate, when a real estate agent or realtor comes and sits down, it's a very interesting transition because what happens is they are, what can you offer me to better my business?
Yeah.
And so it's a little bit different. But I think for seasoned agents, the biggest thing is many times their offering is teaching their processes that they've learned along the way and finding the perfect fit for that, or helping them to even fine-tune their niches more.
Makes sense. Now, Stephanie, you know what a systems and tools person I am. So
Yes,
can
I
you
do.
talk about how your tools and your systems at your company help new brokers or even seasoned brokers to really thrive and move to that next level in their business?
Well, I have to say, Tina Mitchell, you have been a huge part in this, in teaching our agents the one-timing your business. But because really, everybody is different. Realtors there are so many personalities in this industry. And as an owner, really what we need to do is figure out what that personality is and what best fits them. So, for example, if you're a people person and you get filled up by walking out and networking and building relationships, which this is what our industry is, maybe you're not so much into shuffling all the paper and doing all of the tedious little work that comes along with it. So finding a company, for example, we have a couple different offerings. We have the ability to help teach and create database management, which is the most important thing. It's our gold mine. We have a transaction management team that takes the transaction, the agent passes it over to our transaction management team, and they take it from the beginning to the end to continuing the marketing. So really, it depends on the personality, and I think that is something that once you as a realtor or real estate agent sit down and interview a broker, you want to know that they're helping create the best you, not the best company, the best you.
Yeah, that's a great point, Stephanie, and really finding out, like you said, where their strengths are and being able to plug into their weaknesses. Thank you so much for all of the information you provide for my listeners and everything that you do for my clients. I appreciate it so much.
Well, thank you.
And coming up next on the Money Hour, when you are a loved one And it's time to decide if it's a right time for you to get into a smaller place, more convenient home, downsizing. How do you coordinate your estate and organize the transition to your new residence? Ian told me with Caring Transition Seattle, right here on 1150 AM KKNW after this short break.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
Hi, this is Ian Tolmie with Caring Transition Seattle. Caring Transitions is the nation's largest professional network of estate sale, online auction, household relocation services. Whether you're moving across the country, around the corner, or simply downsizing and decluttering your home, Caring Transitions will reduce your mess and eliminate your stress. We're experts and we'll do what's right for your family. Call us today at 206-330-0878 or find us online at Caring Transition Seattle. Thank you.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, January 24th show. Each week I share expert advice and inside knowledge on how today's events and our local economy can affect your money. If you're hearing my show at a different time or day, you're listening to a rebroadcast, you can call into the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com to discuss anything on money or the topics that we're talking about in studio today. Right now I have in studio Ian Tolmie with Caring Transitions Seattle. Ian, thank you so much for coming back into studio. I have a special place in my heart for people that are getting into that next stage of life, and it's just always a pleasure to bring you in studio and have a conversation in this arena. So thank you so much.
It's a pleasure to be here. Thanks for having me again.
And a little background on Ian. And also Jennifer, both passionate about caring for seniors and Caring Transition Seattle is a direct result of their passion. As partners, Jennifer and Ian opened Caring Transition Seattle as a result of their own family going through the emotional stress and helping their own parents transition from large homes where they have lived for decades to a much smaller residence. Jennifer has 7 years experience as a licensed real estate agent in the Seattle area, and Ian is a certified aging in place specialist. Together, it's their goal to assist families in downsizing and liquidation of decades worth of assets, preparing a family residence for sale, and creating a smooth transition into a new living space. And it seems like, Ian, people that are in your arena, there always seems to be there's a story connected, because you have to have passion to do what you do, right?
Absolutely. And it's something that we find so often. There is that story attached to it. And It's something that you have to be sensitive to that, because not only are these people going through some sort of transition, and it might be a family, it might be the parents, it might be the siblings, it could be, anybody. But they're usually going through a very dramatic experience in their lives. Yes. And it's something that if you're a couple that's been in a house for 50 years and all of a sudden you're moving and you have to go into a smaller space and get rid of a lot of your stuff, you can't take it with you. And that's traumatic for the people moving. If someone has passed away and so a child is taking care of a parent who's lost a spouse, of course that's traumatic. And so you have to be sensitive to those situations. And so it's more complex than just liquidating assets.
And to make it more complex, I would think it's a pretty high ratio that a lot of them, they're not prepared for it. So it happens at a bad time, unexpected, and everything has to have already been completed before you even get started.
Absolutely. And it's something that we find so often people are not prepared for it.
Yes.
And they haven't planned properly. They haven't spoken to the right people. They haven't done estate planning. A lot of these things, the majority, I would say, of families aren't prepared. And sometimes it's because, someone dies suddenly. And so you can understand why they're not quite prepared. But many times it's an older couple and they just haven't gotten their estate in order.
Yes.
So we always recommend, working with professionals.
Yeah, and we talk on the show how it's difficult sometimes for kids to talk to their parents about this, and but you need to, so that you're prepared, because it's going to happen, and so be prepared early. So let's talk about what's happening with Caring Transition franchise since the last time I spoke with you. Yeah,
so some neat things are happening. So we've been growing year over year, which has been great, and we have a new office with Caring Transitions opening up in the South Sound, which will cover. Exciting. Yeah, it's really exciting. So it'll open up in Olympia and Tacoma, which will be fantastic. And then also one of the things that differentiates Caring Transitions that I talk about on this show frequently is our online auction site, to be able to liquidate assets through an online process and not just a physical estate sale. And it's been so successful that as a franchise, we're revamping our entire site to make it much more user friendly, a lot more intuitive, and so it's something that, and then also the process of getting assets onto the site, so making that much more streamlined, so we can do it more efficiently for people. Yeah, absolutely.
And for any of you listening out there, as always, you can go to themoneyhour.com and you can type in information on anything that you need to listen to podcasts and previous shows, so and get direct connection with any of the guests that I have in studio. So, Ian, can you talk with my listeners and give a quick overview of services that you might provide for, let's say, a typical client of yours?
Yeah, a typical client, and again, all projects are a little bit different, but our typical services are senior relocation, downsizing, cleanouts, and liquidation services. And the liquidation services could range from doing an estate sale that's very large in scope and scale, in combination with an online sale, or sometimes it's just an online sale because of, a lot of reasons I can talk about later, but those are the typical services that we would provide a client.
And what about not typical?
Well, it's interesting. I think the last time I was here, we were just getting ready to engage with a client, and it was something that they had a huge garage, 800 square feet plus, and it was something that it was full of bins taller than me, and I'm a tall guy, and it was full of bins, thousands of bins, and they didn't know what was in it. And so their mother had purchased things over decades and stuck them in these bins and put them out in the garage. And so they needed someone to really kind of come figure out what's in the bins. Is there a value? What do we do with it? And digging through those entire things. So, those are the types of interesting, odd projects and services that sometimes we find ourselves engaging in.
Yeah. And what is the greatest difference between the traditional estate sale company and services that Caring Transitions provides?
Well, I touched on just a little bit earlier. The big thing that we find is kind of, I'll say soup to nuts, but really kind of helping a family in the planning process, helping a family if they're moving into an assisted living facility, be able to lay out the space that they're going into, making sure they don't take too much, that they plan it out carefully, helping with the packing, helping with the move management, helping with the unpacking and the placement of everything, and then helping with the liquidation process. And then what we also do that differentiates us is the online sale process, which we're seeing just more and more people wanting to do that type of thing for many reasons, but it's something that it really kind of, I think, complements a lot of our other services, but differentiates us in the market.
Sure. And Ian, family locations affect the type of relocation strategy that you're going to suggest, correct?
Absolutely. And it's something that so frequently we'll find, if you live in the middle of downtown Bellevue or Seattle and you have a great house with great traffic, then maybe a physical estate sale makes a lot of sense, because you actually will have plenty of people coming to that sale. Many people in more rural areas don't necessarily have that traffic. And so sometimes it's a real issue in trying to drive people into the sale. And we find that frequently the success of a physical estate sale depends on the number of people coming to it. And you may have things that are quite appealing, but maybe they're not appealing to the right crowd.
Sure.
And so it's something that rural location can be a detriment sometimes to a physical estate sale. Another thing is bylaws and homeowners associations. And so those sometimes, if you're in a country club or you're in something, they don't allow you to have an estate sale. Or if you're in a really nice condo, they won't allow you to have an estate sale either. They don't want the traffic and the people coming in that are unknown. And so those are the types of things that, location can make a difference on how you go about managing this whole process.
Got it. So you talked about, when you were leaving last time, a little bit of an unusual client situation you were working with. What other unusual projects are especially a good fit for Caring Transition Seattle?
one thing we're seeing that's kind of it's fun and interesting is more collections. And so, collections can be anything. The one we're working on right now is my wife is actually literally today going through hundreds and hundreds of antique fountain pens. And the neat thing is one of the services we provide is researching those fountain pens. And what we're finding is if you were to try and sell hundreds of fountain pens in a physical estate sale, you might have someone negotiate you to a couple $100 for all of them. Right. And what we're finding through research is that these hundreds and hundreds of fountain pens, some of them are worth $100, $200, $300 a piece.
Wow.
And so it's the type of thing that you're leaving a tremendous amount of money on the table if you don't market and sell these things properly. And so with access to the right channels and the right collectors and the right audience, you don't get what the value of the product is. And so these fountain pens are a great example.
So like any other financial arena that we're in, you really need to be working with the best of the best because you can be at risk of losing thousands, hundreds of thousands of dollars if you don't pick those right people to represent you.
It really is. It's so true. From what Scott was saying earlier, what Stephanie just said, we can go out and try and fix our credit. We can go out and try and sell our house, and we can go out and try and liquidate our house. But you really don't maximize your return, and you're doing yourself an injustice if you try and do a lot of those things yourself because you're not an expert. And we're all very good at what we do, and that's why people pay us, and frequently we're able to give people a check in return.
Exactly.
So that's fantastic.
Well said. Yeah. So since the last time that we spoke, what are some types of projects that you have been seeing has been a growing part of your business?
Yeah, it's interesting that we're seeing more assisted living facility cleanouts and those sort of things. So when someone leaves an assisted living facility for any reason, going in and actually helping the family do the cleanout, one thing that that can cost $4,000 to $8,000 a month to live in an assisted living facility. And so what you don't want to have happen is not figure out what to do quickly. And so if a family decides, well, we're just going to, leave them in there another month, that could cost you $4,000 to $8,000 just in another month's rent.
Wow.
And so it's something that what we want to be able to do is go in and help them move everything out. Sometimes we'll take some of the stuff off site. We have some locations where we can store assets and we can take things off site for them if they need to get it off immediately, and then we can repurpose it and sell it. Some of it we will give away. Some of it will sell it, but just getting it out of the assisted living facility so that the family doesn't.
That monthly.
Yeah, the family doesn't have that monthly hit, and
Makes
it's huge.
Total sense.
It's a lot of money.
So what about some of the hardest situations that your company faces in working with senior downsizing and relocations?
Well, I touched on a little bit earlier. I mean, some of it is the emotional component. And it's something, frequently the people that we're dealing with have gone through a loss of a loved one, something like that. And that can be a little bit challenging, obviously. And it's something that, we try to be as sensitive as possible to the situation. And so up front, we try to understand, what's the reason for the estate sale? What's the reason for the liquidation? Those sorts of things. So we can really understand how to handle it properly. And we make sure that our employees are well versed in what's happening as well, so they can be sensitive to it as well.
So if I have a listener that is getting to that next stage of life, or children that are helping their parents or grandparents get to that next stage, what is the first steps that they should be taking? The first step is I would advise them to reach out to a professional. We're always available. We do free consultations, but it's not just us. I mean, you can talk to estate planners. You can talk to a lot of people that can give you advice on how to plan for this. And I wouldn't wait until the last few months. If you're starting to liquidate things, you can do some of that on your own. Figure out what your kids want. Figure out what other people want within your estate. Start to move those sooner than later. And it's something that you may plan for it for years, but then when it actually happens, you've already liquidated a lot of those assets. You've moved a lot of things. Your family members have what they want to remember you by, that sort of thing, or that you can't take with you. And so it's something that if you plan earlier, it always makes so much sense. And it makes life so much easier when you go through that significant event. Yeah, isn't that with everything that we do? But so many times people procrastinating, especially in these arenas. You mentioned estate planner. I have a couple of estate planners that I have represent the show in that arena and talk about procrastination.
Yeah.
I mean, that is just an area. It seems like when we get to that next stage of life, those are things that we're really just procrastinating and thinking that we're going to get to later.
Right.
So what else can the family members do, Ian, to help in the preparation to soften this blow and to make this transition easier? If we're going to end the show with helping family members to prepare early, what are those things?
Well, some of the things I would encourage is open the conversation between the kids and the parents. And you mentioned it earlier, and it's something that's extremely important. And it's, we did it with our family that, my mom had us go through everything and put Post-it notes on the back of furniture and things that the kids want, because they want us to have them when they eventually either move into an assisted living facility, they're in a townhome right now, but when they move in, they don't want to have to sell it if we want them. And so I'd advise the parents and the children to talk a lot about it, to figure out what people want and what they don't want. And if they do have collections, be smart about how you manage them, because collections actually frequently can bring a lot more money than people think.
Yes.
And if they're not managed and sold properly, you can't recognize the value. And so it's very important.
It makes sense. And I think a good way to help to start that conversation could be to any family event that you have, if it's the kid's birthday, holidays past, but any special event that's coming up where you've got the family together, it's a good casual conversation to have. Have it, the whole family's there. It's just a random thing.
Yeah.
Or another way is to attend some of these workshops that are being put on to help. And you as a child, take your adult parent, take your parent with you and go through that experience together to help start that conversation.
It makes so much sense. And it shouldn't be a hard conversation. It's something we're all going to deal with it. My wife and I both have parents in the 70s and 80s. Mm-hmm. It's something we all go through. And so to open the door and begin that conversation makes all the sense in the world. And the parents will open up eventually, and they'll begin to realize we do need to be preparing for this. And it will help make their lives easier, hopefully down the road and not in the near future. But it definitely makes their lives easier when something does happen, and something will happen.
Makes total sense.
Exactly.
Ian, thank you so much for coming back in studio, and excited to have you back in again in the near future here.
I appreciate it. Thank you, Tina.
And thank you to you, all of my listeners out there. This is your host and mortgage expert, Tina Mitchell, signing off for the day. Enjoy the rest of your weekend. I will be here same time, same place next week, 11:50 a.m. KKNW for the Money Hour. Have a great weekend.
The preceding program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit absoluteloans.com or call 888-90-HOMES for cost information.